Hi, welcome to Accrued Interest. In this video, I'm going to explain how you can be a contrarian value investor by investing in Uber. Now, to be contrarian, it's not enough for you just to do the opposite of what other investors are doing. You want to pay attention to when strong companies have a hiccup for narrative reasons. On my watch list, I like to keep track of strong dominant companies whose stocks have fallen over 20% for reasons that are not tied to earnings. Now in Q4 of last year, Uber fit this description perfectly. From October through the end of the year, Uber stock was down over 30%, going from $80 to about $60 a share. Now, during that time, Uber only had one earnings release, and it was mostly positive. The company didn't have any major hiccups. The reason, in this case, was narrative. In order to be contrarian, you need to understand the narrative that is causing other investors to be bearish. There are two main fears around robotaxis that were impacting Uber stock. First, Waymo had just come out with news that they were entering the Miami market with Uber as a partner. At the same time, Tesla was making announcements that in 2025, they too were going to be rolling out their own robotaxi service, and there was fear that could take share away from Uber. Now, to be contrarian, you have to look for counterexamples that violate the narratives that the bearish investors have put out there. In my opinion, I was of the belief that Waymo and other robotaxi providers are going to need Uber's experience and, more importantly, their network technology to maximize their robotaxi fleets. In Uber's latest earnings release, they had an interesting section where they explained how Uber's technology helps make robotaxi companies better. Ride-sharing demand is much more complicated than just ordering a pizza. There are ups and downs, peaks and valleys throughout the day, throughout the week, and no two cities are alike. Uber already has a track record working with Waymo and other robotaxi providers. Tesla shareholders have been waiting for robotaxis to come for about 10 years now. It's been a long slog. Every single year, Elon Musk has said that robotaxis are just 1 year away. Now, I'm not saying that Tesla is never going to get their robotaxis out there. I'm just saying that today, in 2025, fear of Tesla's robotaxis is not a sufficient reason to sell Uber stock. In order for the stock to re-rate, you're going to need a catalyst. You're going to have to wait for a company's earnings release to prove whether or not you were right or wrong. We're not going to do a deep dive of all the metrics in this video, but here are the key things you need to know. For revenue, Uber is still growing organic revenue at a very high rate for a company its size. Last year, it grew over 20% in terms of bookings and still has a pathway to continue that into the future. Uber is also focusing on profitability. They're growing their EBITDA anywhere between 30 to 40%. And most importantly, Uber is converting more of that EBITDA into free cash flow than ever before. So as a result of the strong earnings, Uber's stock has outperformed the S&P 500 year to date, up about 35%. I think that you should stay long Uber and even consider buying more, because over the next 12 to 18 months, I see a path to $100 a share for Uber stock. In bottom line, you're going to want to stay long Uber and ignore the narrative fears about robotaxis eating their lunch. I would avoid Lyft because I'd rather go with the market leader and not have to bet on the number two. And lastly, I'm not going to tell you to go short, but just be careful because investing in Tesla is very close to gambling. As always, thank you for watching this video. Don't forget to like and subscribe, and stay tuned for more videos to come in Q1 2025.